There are two assumptions I hear all the time from lakefront buyers that aren't necessarily correct. The first, I'm going to have to pay higher taxes because I'm buying something on the water. Not quite true. The second one is that if I'm going to buy something on the water, I'm going to have to automatically pay flood insurance. Also not true. We're going to take a look at it right now. Here in Central Florida, waterfront homes are not typically taxed at a different tax rate. The tax that you're going to pay on a piece of real estate almost entirely depends on the value of that property, the assessed value. And there is one important disconnect that I find happens with buyers so often, whether it's waterfront or non-waterfront here in the state of Florida, and that's relying on the historical tax bill that they see on properties when they're considering a purchase. So we're going to talk about that in a minute. But big picture, here in Florida, your taxes are based on the assessed value. So it really doesn't matter if you're on the lake or not on the lake. Let's say you buy a home that's $1 million piece of property on Lake Conway. You will get taxed based on the assessed value of that property. Let's say you purchased instead $1 million house across the street from that one. Same municipality, same tax district, and it was also $1 million home. Your taxes are going to be essentially identical whether it was a $1 million home on the lake or a $1 million home off the lake. That assessed value of that piece of property is what's going to determine your tax bill every year. Now, there is a difference worth talking about on the Conway Chain of Lakes, and this is really quite unusual here in Central Florida. Conway Chain of Lakes has what's called the Lake Conway Water and Navigational Board District, and that is a special taxing district that encompasses all the properties that are on the Conway Chain of Lakes, so Lake Gatlin, Middle Lake Conway, Big Lake Conway. If you're on the Conway Chain of Lakes and have direct frontage, you are part of that taxing district. But here's the catch. The actual millage that comes along with that is 0.41 mils. So back to our example of a home on the Conway Chain of Lakes, let's say you bought $1 million piece of property. That's going to translate to about a $410 addition to your property tax every year. In the grand scheme of things, it's really not that significant, $35-40 a month. But that's really the exception here in Central Florida. And again, when you start talking about these price points, it really does not have a significant impact on an owner's property taxes moving forward. Where does that money go? Well, it is a dedicated fund that is paid by the property owners that live on that chain of lakes to maintain the lakes, the navigability, and the overall health of the lake. Now, the tax issue, quite frankly, this is more interesting because here in the state of Florida, we have some fairly convoluted property tax laws. And the biggest misunderstanding I find with buyers, especially people that are new to the state, is when you're looking at a piece of property online, whether it's Realtor, Zillow, the MLS, they will usually show you what the current property taxes are on a piece of real estate. That can be extremely misleading. I tell my clients pretty much ignore that because it has no real relevance to what the future property taxes will be on this property. The reason being, we have, many years ago, they put in place a law called the Save Our Homes Act here in the state of Florida that was designed to prevent people that had been on a piece of real estate from basically being taxed out of their properties. And the way this works is if this property that you own is your primary residence, meaning it's not an investment property, it's not a vacation home, but you're living there, it's your primary residence, your annual property taxes are capped and cannot increase by any more than 3% per year. Again, let's use the Conway Chain of Lakes as an example. Let's say, for instance, there's two identical lakefront homes side by side, and they're both on the market for $1 million. If property A had been with the same owner for, let's say, the last 40 years, and property B had just, let's say, transferred 2 years ago, online, those property taxes on those properties are going to look drastically different. And here's why. The one that the occupant has been there for 40 years, their property tax rate was set when they first purchased 40 years ago and was not able to increase by more than 3% per year moving forward. So I've literally seen lakefront homes that might be on the market for $1 million and they're paying a tax bill of a few $1,000s a year. Now, the one next door, property B, let's say that one transferred ownership a year prior, the tax authority would have reassessed that property when it last transferred. So you will see that it has a much higher tax bill every year because the county was able to go in there and reassess and scrap any sort of savings that may have been enjoyed by a previous owner. And you might have a tax bill on property A to be, let's say, for instance, $3,000, and property B right next door, identical property theoretically, could be $12,000. So do not pay any attention to what you see online as far as the tax bill on any particular property here in Florida. Lakefront, non-lakefront, it goes across the board. And there are some tricks I can explain as far as trying to come up with what might be a reasonable tax approximation for what you're going to take on as a future property owner. All right, myth number 2, flood insurance. I get this one all the time. Mike, we want to buy a lakefront house. We know we're going to have to pay flood insurance because it's on the water. Wrong. That's not how flood insurance works, and I can show you this by looking at some FEMA maps. Flood insurance is going to be based on where your property elevation is in relation to the FEMA flood zones. Most waterfront homes here in Central Florida, they sit inside flood zone X. Now at some point, that property, as it goes down towards the waterfront, the elevation will change, obviously, to get down to the water level, and you will have what's called a higher risk flood zone immediately around the perimeter of the lake. But 99% of the time, that does not impact the actual structure where the house sits on higher ground. Now, this doesn't apply all the time. There are some exceptions. There are some properties that sit inside the higher risk flood zones here in Central Florida, and you pay more for a flood insurance policy. But for most lakefront homes, that's not the case. I think the best way to do this is let's look at the actual FEMA flood map. So everything in green, that's flood zone X. That's a low risk flood zone. You do not pay flood insurance in the properties that you see in green. As you look around here on the Conway chain, you can see everywhere around the perimeter of the lake here, there is a yellow section. That's flood zone AE. That is a higher risk flood zone, and you will see that around the perimeter of every lake here in Central Florida. But what's worth noting, as you zoom in on these properties, you'll actually see the footprint of the property, and on almost all situations, most lakefront homes, the actual dwelling, the primary structure is going to sit outside of that yellow zone, which is the AE flood zone. I'm out there, I just sold one last year where that AE flood zone does creep up into the footprint of the house. You will be required to pay significantly more flood insurance for that property. But just because you live on the lake does not automatically mean you pay flood insurance, and in most cases you don't. Now, this can be lender dependent, and some insurance companies will force an owner to get what's called a supplementary flood policy. It's not tens of thousands of dollars. What I've seen out there, it might be $400 to $700 a year, and it's typically not that big of an impact. But be careful presuming that just because you're on the water that you've got to get a flood policy for a particular house. And all this stuff, taxes, flood, that we're talking about, goes back into doing your due diligence, knowing to ask the right questions when you're looking at a property and really understanding what you're getting into. So asking questions about the taxes, asking questions about insurance, all smart, great questions to ask. There's more to understand because waterfront properties, you've heard me talk about before, there are some hidden costs. There really are. And a lot of times, maintain the structure of a dock, seawalls, irrigation, maintaining the waterfront itself as far as aquatic weed control. All these things, there is true cost of ownership to living on a lake that you do not encounter with a non-lakefront property. But there's also obviously the benefits. So these are the kind of things I help my buyers with. If you'd like more information on this, like to do a deeper dive on something, please comment down below and let me know your thoughts. Thanks for watching. I'm Mike Derenthal. Talk to you soon.